Hi, this is Daniel. You're watching Unrivaled Investing, a no-hype mission-focused channel trying to find you exceptional companies and unrivaled investments. I'm looking for potential multi-baggers, folks, the types of stocks that have the potential to go up hundreds or even thousands of percent over time. Well, I don't think Alibaba really has the potential to go over thousands of percent over time. I do think it has the potential to potentially go up hundreds of percent over time, and that's personally why I own stock in Alibaba. And you might say, well, wait a second, Daniel, you're still talking about Alibaba after all this pain. This stock just can't seem to get a break. And in all honesty, today, I have even more bad news to report. And it's just been one bad thing after another. After I did an initial video saying, hey, here's the stock I own, here's why I like it. You know, it's interesting, Charlie Munger and a bunch of other really prominent, successful investors have recently bought. But you know what? Is it starting to look like a mistake? I mean, there's so many problems that are going on. Today is definitely one that will impact Alibaba and a bunch of Chinese stocks' performance at the very least in the short term, maybe for a quarter or two. The question is the long-term value impaired? I'm not really I don't really think that the long-term value's been impaired, but you are seeing certain developments that do suggest an economic slowdown and some real challenges that the economy is facing. Let's talk about the latest one that China's facing. And so as we look at this, with what's going on in China, there are massive power outages that are going on as, China power crisis, thermal coal inventory nears record low as country suffers worst outages in a decade. They talk about how 20 out of 31, now keep in mind, this is from state media, so this is the glossed up version of what they're reporting. 20 out of 31 provincial jurisdictions have implemented electricity rationing measures since mid-September. And what could this mean? I mean, part of it's the everyday effect where folks are shopkeepers looking to keep their stores, refreshed. You're looking at refrigerated items that, ordinarily you'd want to keep refrigerated, and now maybe you're starting to have some problems. So the everyday annoyances with power outages. But here it is. This reflects the true severity, where there was this image captured of this massive power outage outside where the only thing lighting the way were the lights from the cars. And they talked about illustrating the severity of the situation. Traffic lights were abruptly turned off in the northeastern city of Shenyang last week as part of power rationing measures that local authorities deemed necessary to avoid the collapse of the entire grid. This is a very problematic situation. And in all honesty, China's economy was already slowing, was already showing some challenges as China's manufacturing PMI recently contracted to its lowest epidemic point in September. So not posting, record growth or anything like that. If anything, they're showing a slowdown. And this is going to hurt. That's the short of it. You see one thing after another going on here, and this power outage, this is going to hurt. And they talk about how the China power crisis, it's not only going to hurt the citizens there, but it's going to hurt these local businesses. They talk about the small and medium enterprises as firms upend production. Workers are dozing off in the dark. And these small businesses were already under pressure from higher raw material costs and the coronavirus lockdowns. And it is worthwhile to understand that it doesn't end there. The problems actually start looking more global in nature. Here's a chart of U.S.-China trade, going back to 1980, and it shows, sort of the question is, who is the larger trading partner, whether or not it's China or the U.S. And you can see the U.S. used to be one of the largest trading partners in the world, but it's really given up that position to China over the ensuing decades, where now China really is the main trading partner for the world. So that's, what most of these countries are going to be very interested in maintaining a stable relationship. And so when you have these types of things, when you're the largest counterparty in the world to various different countries for being the production hub for these different countries, you're going to expect shortages and higher costs because it's just going to take longer to make stuff. Because look, here's one example. Apple suppliers warn China's energy rules threaten the supply chain. They talk about how several companies, including key Apple suppliers, have already said they had to halt or reduce operations, restricted the supply of electricity for industrial use through the end of the month. So this is going to ultimately continue to push on that thesis of, yes, we're going to continue to see shortages, continue to see inflationary pressures. Now, why is this all happening? Let's take a quick step back. And, to understand China's, economic consumption and picture, China consumes more than 3 billion tons of thermal coal annually, but only about 7% of that is imported. And then Beijing unofficially banned all Australian coal in October. Okay, so why would Beijing do that? Why would China do that? And, the reality is it's a combination of an ongoing trade war with Australia. You have anti-dumping tariffs and then retaliatory actions going back and forth, this trade war with Australia, which seems to be a really imprudent thing for China to do. If anything, I would play nice when they're a key resource provider, in terms of Australia. And then Australia also pushed for an international investigation of the origins of the coronavirus. So that upset China. So they effectively unofficially banned their use of thermal coal, and that's what's driving this, this shortage, and it's leading to problems here where, I personally own a basket of Chinese stocks. I mean, that's the reality of what I've got here. It's about 25% of my portfolio, and as I look at it, has it detracted from my recent returns? Absolutely, no question about it. I've definitely seen some pain. Alibaba is just one of the positions. I own another position that trades effectively below liquidation value. I have another one that I think is a really quality e-commerce platform that I think will also continue to grow. I own the Hong Kong shares for the most part, so I think I'm sort of removing that risk of a delisting. Now, could I be wrong? Of course. Now, in the past, I would talk about how I would sit tight and just watch sort of the compounding. But as I see the negative news continue, I'm taking two approaches that I'm considering. So let me sort of dive into those different elements. So one is that I recalibrate my thesis. So I'm sort of saying, okay, this is not good news. There's no way power outages can help an e-commerce platform. If people can't even shop online, like what are you going to expect their business to do? Of course, their growth rate will get hit for part of a quarter. If people just can't even get online access, their internet goes out. So you think of something like that. So I'm thinking in the short term, you might face some pain. But even if you were to take a broader view, because keep in mind, my thesis when I originally looked at Alibaba was saying, hey, over the next 5 years, I like the risk reward. Since then, it's down about 30%. And I'm sort of saying, okay, let's, what do we consider from here? And so now it's, okay, let's tweak the assumptions so that way maybe there's, the growth that I was expecting, maybe it's even worse. Maybe instead of, let's say, 15 to 20% growth in their core e-commerce business, maybe it's only 10 to 15% in the years ahead. Can you still pencil out a satisfactory return if that's the case? And so, as I'm looking at this, I still, like Alibaba, I haven't, cut my stock. I haven't cut my shares despite, what effectively it's hurt the portfolio in the short term. I'm still looking at this over a multi-year perspective. That said, I do consider hedging, and I have hedged about half of my Chinese exposure. So, if this does continue to just get brutally beaten up, where, you see power outages, who knows, maybe even Xi Jinping's going to, put his hand to the scale again and make it, levy some more fines and just make it even tougher. If that happens, I would expect further punishment to the stocks. I'm not expecting it, just given the litany of events. You see the fines, you see the wiping out of the for-profit education sector, you see these donations, you see the breakup of Ant Pay or Ant Financial, one thing after another. And so I'm looking at this and I'm sort of saying, at this point, I just want to hold it and sort of see how it plays out. I still like the risk reward over a multi-year perspective. In the short term, I have no idea what's going to happen. I don't think anyone has a perfect crystal ball saying, oh, this is exactly what's going to happen. In the short term, it's in a downtrend. Wouldn't surprise me if it keeps going lower. Do I like the risk reward over, let's say, a 3 to 5 year time frame? I think the fundamentals would support it. Now, a lot depends on what do they do with when crises, ultimately developed. I've talked about Evergrande, where here it is, you have this construction industry, and if this starts blowing up, will they handle it intelligently? So far, it seems like they've very much kept it contained, where they're sort of saying, we're going to figure it out. The state-owned banks, they're going to figure out how to own this and make sure this doesn't develop into contagion. And they'll effectively paper over the problems. And I did a prior video saying how, look, if China effectively papers over these problems, prints more money, that actually could be a net positive for various different e-commerce platforms like Alibaba, because you have more inflation and therefore, effectively you're doing more business, even if the same amount of goods, is sticking on the platform. So I look at this and say this potentially has broad implications for investors around the world, partially because of the shortages. In the near term, Chinese stocks just continue to be in a world of pain. I'm sitting tight. I do have that hedge on. I'll take that off. Journey subscribers know that, I do have some hedges that I, take on and off just based largely on price action. But most of my focus is on these fundamentals, trying to find these potential multi-baggers over time. And honestly, if this isn't, your boat, you're not looking for it. I did do a prior video, on CVS, how Dr. Michael Burry owns CVS, has about a 10% free cash flow yield. And so, if you're looking for a stable company that still has potential multi-bagger, because you have that free cash flow, you do have, let's say, low single digit growth, plus you have potential multiple expansion, I would say check out CVS because that, could be interesting. And plus you see Dr. Michael Burry owns it. If you're interested in following, what am I personally doing? I do have, sort of a range, of potential multi-baggers that I call out each month for Journey subscribers. I call out, you go to unrivaledinvesting.com. By the end of the month, I call out a potential multi-bagger. And, these multi-baggers range from very stable to hyper-growth companies growing over 100% a year that trade at, let's say 5 times sales or 3 times sales, and where I think, it has that potential to be a multi-bagger if they continue to execute in the years ahead. So it has that range for the investors that are interested, and checking out their different options, seeing various different ideas. If this video, in terms of lights out for China, the continued pain for China's stocks, why Alibaba stock doesn't seem to be able to catch a bid, if this video has been helpful for you, please make a point of hitting that subscribe button, hit that thumbs up button. Thanks so much for watching.